Awesome. Well, welcome everyone, and thank you guys for joining today. My name is Colin O'Keefe. I'm the co-founder of Merchant Cost Consulting. We are a cost reduction firm specializing helping hotels, hospitality clients reduce and optimize their credit card processing spend without changing, anything on their current day-to-day, operational systems or vendors or software, POS systems, etc. So we're super excited for you guys to join here. And I would like to introduce Robert Mandelbaum, Director of Research Information Services at CBRE, who will be moderating the webinar and how you can get the best out of your F&B strategy here. So thanks, Robert.
Thank you, Colin, and welcome everyone to the International Hotel Association's webinar on optimizing luxury F&B profitability, strategies for revenue growth and cost management. Today's webinar is brought to you by Merchant Cost Consulting. Thank you, Colin. Joining me today are experts in the field of luxury hotel food and beverage operations and cost management. Let me ask each of our guests to introduce themselves. David Grossman, we'll start with you.
Yeah, thank you. David Grossman, Vice President of Operations for Sage Restaurant Concepts. We operate about 60 plus hotels throughout the country based in Denver, Colorado. Very excited to be here. So thank you for having me.
David Israel, I'm Senior Vice President at Hotel AVE. I oversee our roughly $350 million worth of third-party restaurants, bars, and nightlife, as well as assist on our $10 billion under advisement on the asset management advisory side.
Daryl?
Hi, my name is Daryl Stark. I'm the Vice President of Distribution, Revenue Strategy, and Sales for Noble House Hotels and Resorts. We are based in Kirkland, Washington, and operate 28 hotels in the United States.
And Colin, once again?
Yeah, cool. So Colin O'Keefe, I'm the co-founder of Merchant Cost Consulting. We are based out of Boston, Massachusetts. So we've been there for about 8 years, although we do have, some people around the country here. But yeah, excited to be here and, excited for the webinar.
Great. Welcome, everyone, and thank you. To provide some context for today's discussion, I pulled some data on luxury hotel food and beverage operations from our own CBRE database, as well as Calibri Labs. In this first chart, we look at the top-line recovery of luxury hotels relative to the industry at large since the COVID recession in 2020. As we can see, while luxury hotels have benefited from pricing premiums during the recovery period, the sector still lags behind pre-COVID levels of occupancy, thus muting RevPAR growth compared to the rest of the industry. Despite the lower levels of guests, luxury hotels have enjoyed, to some degree, increases in both food and beverage revenue and total hotel revenue compared to pre-COVID levels, thus indicating some creativity in stimulating guest spend beyond the guest room. Focusing on food and beverage department revenues, the greatest gains in revenue have been achieved in restaurants and lounges within hotels. Banquet revenue is still lagging as group demand continues to recover to pre-COVID levels. Of note is the greater growth in revenue per occupied room, which again confirms the ability of luxury hotels to increase guest spend. On the expense side within the food and beverage department, we see that costs are rising at a greater pace than revenues, which has resulted in lower department profit margins compared to pre-COVID levels. Our panelists will share with us today what they are doing to control expenses. Labor continues to be the #1 expense and cost challenge within all hotels, and luxury hotels are not exempt. Not only are salaries and wages rising, but recruiting and retaining labor has been a challenge as well. Finally, we focus on credit card commissions, which represent an expense equal to 2.4% of total revenue, an expense ratio which is similar to insurance, which has been getting a lot of focus these days. Fortunately, we have our sponsor today with us, Merchant Cost Consulting, who will share with us some guidance on how to control this expense. Let's begin our discussion with David Israel. Others can join in as well. David, what are the key factors driving increase in food and beverage revenues in luxury hotels And how can these be leveraged further?
So I think we've gotten very creative across the assets and finding ways to drive average check, right? So with covers being down slightly, we're really finding ways to drive higher ticket items, experiential, right? I think you're definitely seeing on the luxury side a lot more splurge spending. And that kind of is being offset by the increased pricing. So we're finding ways to create value and really keep people on property. It has really been a core focus for us today. It is really getting the most out of each day part. And it's not necessarily only about revenue. It's not only about revenue, it's also about profitability, right? We're finding ways to be more creative in the middle of the day parts, and creating more pop-ups and fluctuations in our menus to particularly in the resorts, keep people on property and happy and spend more money throughout the day. And also, play into both the lighter and the heavier fare, right? So we're seeing a lot more coffee shop and grab and go revenue in luxury assets. And then, in the dinner day parts, finding ways to get them to order additional courses.
David Grossman, what have you seen in your hotels in terms of the factors that have influenced an increase in food and beverage revenue?
Yeah, I mean, I think David nailed it. Experience is what the guests are looking for. They want something unique. They want something different. We've kind of embraced some of the challenges that we faced in COVID and leaned into them in areas, and then we've kind of pulled back in others. So, we have a property in Minnesota that embraced the igloos like a lot of us have. And we found that the winter activation really worked in that market. And so we've actually leaned into that even further, going a little bit more luxury with our igloos, making them a little bit more stylish. And actually this winter are experimenting with some kind of ice fishing experiences on Lake Minnetonka, paired with a tasting menu and dinner and something a little bit more luxurious, giving our guests, giving those travelers something that really wows them, but also something that they want to, that makes them feel like they've had a unique experience, which I think is huge for revenue growth, for creating buzz, hopefully driving that covers back up, but really focusing, to David's point, on check average and those experiences.
So pardon my naivete, but you mentioned igloos, literally outdoor facilities for dining?
Yep. Yeah, we have 4 that sit out front of our hotel, and we've definitely leaned back and forth on whether the guests really like those, and in some markets they do, and some we don't. We found that, again, in the winter kind of heavy markets, people actually embrace the igloos. It's an opportunity for them to do something a little bit more comfy, a little bit more luxurious. And there's nothing really better than sitting out in a snow globe in the middle of Lake Minnetonka, sipping a nice glass of wine. So, we have definitely leaned into that in some of our markets. We've had others where they haven't been as successful, but I think it's just kind of finding what is unique for the market and what the guest is looking for. And then, really leaning into it and going not just halfway there, but taking it all the way from an experience standpoint.
So you mentioned, what the guest is looking for. To how much have these initiatives been driven by the creativity of your staffs as opposed to just meeting the changing needs of consumers? Daryl, David, anyone?
Yeah, I mean, I think for us, it started with, meeting the needs of the consumers. But then as you start to see what your options are, you have to be creative within that. And our teams have done a really great job embracing the creativity. As a restaurant operator, I always enjoyed those private events, those activations, because it's something a little bit different than what we normally do day to day. It allows us to embrace that new side of creativity. So I think for us, it's a blend of both of those things.
And I think David hit it on the head, right? It's got to be hyper local, right? It has to be something relevant to that specific market, right? Or a complete change from that specific market, right? Like we have a space that, or actually we have a few spaces in New York City that we recreate twice a year into whatever it is, right? Like a ski lodge, a luau, right? I think, keeping concepts relevant and driving a reason for people to come is hugely important, right? And on, the resort or the urban side, being able to come up with the excursions and things like that. I think is really how you stay relevant today.
Yeah, those unique local experiences, that's something we even heard pre-COVID, and it certainly got accentuated since then. Okay. So as we saw in the slides, while revenues are growing, so too are costs. Daryl, then maybe David, how can luxury hotels manage rising costs without compromising the quality? Daryl, let's start with you.
Sure. Some of the things that we're leaning into at this time is looking for strategic sourcing and procurement and really looking more for local providers. We feel that you can kind of cut out some of the middleman, if you will, on that and actually find yourself in a position to have some better pricing. But you can also promote that on your menus, which makes it more destination centric. And it makes it a more unique experience for people that are coming in and dining in the food and beverage outlets. Other things that are probably a little bit less guest facing on that is really talking about making sure that we're reviewing our profit, our P&L. You know, what's happening with our pricing, what's happening with our margins, and do we need to address our pricing? Does it need to be increased potentially, or is there something that we can do within our own menu mix to be able to bring the margins back into line where our expectations exist? And I think the last thing really that helps us a lot here is through training of the team that's in the front of house. Upselling is extremely important, and making sure that they are knowledgeable of where the most profitable items are on that menu to be able to promote those. And then also incentivizing the team and sharing in that, because what we found is that when they have a little skin in the game as it relates to getting the upsell program and promoting sales, that we really see an uptick in the upsells themselves, which helps out in the P&L at the bottom line.
So by encouraging the staff to upsell, increasing revenues, and strategically revenues that have the highest profit margin as well.
That is correct.
Yeah, I agree. I think, sourcing is huge. We have taken a quality over quantity approach, especially in the luxury market, looking for things that are a little more curated, a little more elevated, but also limit the amount of SKUs and the amount of product that we're carrying in house. That'll make you more efficient, less waste. So I think that's been a huge approach for us, slimming down our menus to be a little bit more streamlined from an execution standpoint, helps with our labor, but again, helps with waste, helps by making sure that we're really accentuating the products that are delivering not only quality to the guests, but also dollars to the bottom line. And then I could not agree more with Daryl. Culture and training is so huge for us right now, whether it's incentivizing how to sell, hospitality. There's just so much that we're doing, and I think that we need to do as an industry, but within our company that we really focus on, so that our teams can have the best possible product to put forward to their guests, but also understand kind of the ins and outs of the business and the financials, so that they understand where they fit into that whole puzzle. I think is huge for our success.
Yeah, one other thing I would add is I think there's been a big shift, and I think it was starting pre-COVID, but I think, this is where Daryl comes into play, is I think we've gotten a lot more quantitative and taken certain things we do on the hotel side into the food and beverage space. And I think, the metric, everyone used to be so focused on cost of sales. And I think now people are beginning to really focus on cost to plate because of the labor piece. So you're seeing different things coming pre-butchered. You're looking at how many steps it takes to execute certain dishes, right? Plus the cross utilization and all the above, right? So I think we're getting a lot more financially savvy on the food and beverage side. And I think everyone has learned the hard way that cutting service is not the answer. So you need to embrace the service, and you need to figure out how to, drive the margins elsewhere, because the hospitality is what's driving the pricing today.
Yep. I think there's an embrace of technology as well. We found, we're even revenue managing tables in some of our restaurants, which, if you'd asked me that 2 or 3 years ago, I would have thought you were crazy. But if we have live musicians, or we have spaces that are activated in a certain way, we'll charge extra for specific tables. And that's been super successful. We haven't had a ton of guest pushback. In reality, guests want that guarantee. They like to know exactly what they're getting from us. And I think it's been very successful for us at the properties that we've used it.
So David, you touched on the word technology, which obviously is the rage these days. Sticking to the cost side, How have you seen, if any, technology helping improve efficiency in food and beverage operations? I'll open that up to anyone.
The seating software that we use these days, OpenTable, Talk, Resi, they've all really improved as far as what you can offer, as far as creating efficiency in how we're getting guests in and out of the building. The technology from a POS standpoint has improved so extensively. Handhelds, tap and go credit cards. There's a lot of time savers there and ways to make things more efficient. And then I think even just embracing some of these labor management systems that are out there has been so massively huge for efficiencies, and has really helped us not only operate better, but write better budgets, forecast better, and understand the financial side of what we do better.
Right. And I think a lot of the mobile ordering that we explored a lot during COVID because people wanted to be more separated, has taught us that we can deliver room service anywhere in a property. It enables you to monetize a lot more spaces than you ever have before. So I think that's something that came during COVID and is very much here to stay. Right. I think I think most of the technology we saw during COVID is here to stay.
So you mentioned the word delivery, David. Taking that in another context, during COVID, did any of you resort to the delivery services? And has that been something you've retained after COVID? Fulfilling delivery orders.
I would say yes. And to David's point, it's also something we yield in revenue manage, right? We charge bigger premiums, we turn it on and off, right? I think there's both delivery in the hotel and outside of the hotel, right? We yield the pricing, and that's why in room service, a lot of people have moved away from paper menus so that they can change items and pricing, right? And there are times where, you price your room service static to the hotel, like static to the restaurant. And there are times where you charge a premium, right? Yeah. And there are times when, particularly in the higher labor markets, you may actually incentivize the guests to order stuff, right? Via happy hours and stuff like that throughout the property to utilize your room service team.
So sticking with room service, as indicated in the chart earlier, we're tracking in luxury hotels still a bit of a lag in room service revenues compared to pre-COVID levels. But apparently, to Daryl's point earlier, has it evolved to where it's more efficient or maybe more profitable, even though the revenues are quite not back to pre-COVID levels?
I would also think that some of that is influenced by the type of traveler that we have in the hotels. Corporate preferred travel has not rebounded completely. And that tends to be the customer that's going to come in, or the guest that'll come into the property and order room service, depending on travel schedule, et cetera. So I think that does have some influence in it as well.
And to follow up on that point, the other revenue source that was lagging was the banquet revenue. Is that just a function of group demand not returning?
Yes.
Yeah, and I think it's a nature of mix. And I think on one of your charts, you show that the per occupied room is up for both of those.
Yes.
Right. I think if you looked at banquet per group occupied room, you'd see that it's actually skyrocketed. But the overall PAR is what's down. And I think that speaks to the higher the higher level strategy of these hotels are driving slightly lower occupancies, higher rate on the hotel side. But they're maximizing similar on the hotel room. On the food and beverage side, they're maximizing more spend per customer when they're in the building. So your PORs are way up, but your PARs are still down a little bit.
That was striking, and especially in the luxury segment.
And you also see AV, service charge, things like that, right? I think guests, I think the guest is understanding that they need to pay for certain things today in order to get certain services.
So we've talked about igloos, we talked about local experiences. What other sort of creative food and beverage operating models, either signing up with local celebrity chefs or outsourcing F&B? Please share with us some other creative models that you've done to stimulate food and beverage revenue at the luxury level.
Yeah. I'll start. We've used ghost kitchens or host kitchens in the past. Maximizing outlets when they're either not as busy or in off hours to allow third-party delivery services to come in and use our space, or we operate and they just build out these digital menus and platforms to do delivery. While it's typically not serving the guests that are in-house or the guests that might even come in-house to eat from some of the markets that we're in, it is an alternative revenue stream. It's allowing us to be more efficient with our labor. We have a couple properties that are bar focused, but they do have food elements. And so if we have, one or two cooks that are there and maybe they're not, it's not a full service dinner restaurant, they're just doing bar food, the ability to add in some incremental revenue to that outlet through third-party vendors, through these host kitchens or ghost kitchens has been really effective for us as an alternative revenue stream.
Yep. And focusing on the meal parts we're good at, right? So when you have the celebrity chefs or, a lot of the third parties or, the specialized programs are really good at dinner. Maybe they're good at lunch and dinner. Maybe they're good at nightlife. They're not great at the middle of the day, right? And we as an industry or the standalone restaurant industry traditionally is not that good at staffing, 7 a.m. to 5 p.m. So, we've partnered with groups that are really good at that to take over parts of the day and almost, for lack of a better word, subcontract or sublease to them. So we brought in coffee shop operators who all they know how to staff is during the day. So they have less call outs. They know how to incentivize their staff. That's really been, from a profit perspective, extremely accretive because most of our properties lose money before 5 p.m. in food and beverage. So if we can increase the experience while even breaking even, we win.
And are those like a lease? Do they lease out yours, or is it a commission?
We've gotten very creative, right? I think some are effectively leases, some, with the high end, whether it's resort fees, whether it's with consortia amenities, we also have to give, you give Amex, you give $100 food and beverage credit. So in a lot of those, instead of them paying money, we've pre-negotiated for them to take a huge discount on that, right? So if I reimburse them at 50 or 60 cents on the dollar on a resort fee, a destination fee, an Amex credit, but then they get all the other stuff at 100%, I don't lose money. I actually make money on the fact that they're servicing those guests and I'm paying it at a discount at a cost plus model. It's been extremely accretive.
And I think you mentioned before, especially in luxury hotels, it's not necessary. I mean, you can't really cut because people are expecting a certain level of service. So it's just reconfiguring the delivery of that service in a way that's most profitable for your hotel.
Right. I mean,
delivers the service to the guest.
To the customer, they actually are getting a better experience because they're getting really good baristas, they're getting great pastries, they're getting good egg sandwiches, whatever it is. And that's probably better than we could have delivered in a more dependable fashion than we could have delivered. So to the guest, it's actually better and more luxurious, and you're leveraging local partners, right? Which kind of plays off of that.
Local theme. Okay. So let's just temporarily step outside the food and beverage department and talk about hotel operating expenses in general. Colin, as noted before, credit card commissions, they're a fairly significant expense for hotels and growing faster than the pace of revenue, which to me seems a bit counterintuitive since it is my understanding that most credit card related fees are charged as a percentage of revenue. So tell me, what are some of the new trends that you're helping your clients with in terms of payment processing solutions?
Yeah, no, for sure. I think everyone can probably agree that the interchange and credit card commission rates are fairly out of control, to say the least, especially in these markets, right? Because everyone in these markets, for the most part, it has some type of high-end rewards cards, and anytime you have like a fancy rewards cards, that interchange fee is going to be tremendously more expensive than like a debit card or kind of like a standard credit card. So anytime you're serving, a high-end user, unfortunately, they have fancy rewards attached to that. And that means that the business and merchant is going to be paying a lot more, right? So some things that, we've seen, especially kind of in this world, in this market, that has popped up more and more recently, and I'm sure you guys have seen it at an airport or a different hotel or whatever, but it's called dynamic currency conversion, which is really interesting. So, if you're seeing foreign travelers, right, like people coming from Europe or anything like that, you have the ability to set it up on the point of sale automatically, where they can settle their transaction in their home currency, and then the hotel or restaurant or whatever will charge them over a 3% fee for that, settle, right? And then in turn, the hotel and the credit card processing company will share that revenue share, right? So like someone that's doing a ton of volume and has a lot of foreign travelers, this could be, hundreds of thousands back in profit for them, and it's a super easy, basically, offset to some of these merchant fees. So, in this market, in regards to, most of the time they're priced fairly well, so you have to kind of do some tricks and trades and things like that, right? Because you can't negotiate with Visa or MasterCard, et cetera, for the most part. They kind of control the industry in that sense. So I would say dynamic currency is getting really, really popular, and especially business travelers, they love it. They don't have to kind of calculate the exchange rate and things like that. It just shows up in their account as a $2,000 charge or whatever it might be.
Right. The other piece of that, particularly in the international markets, is a lot of the cards have added real premiums that people are charging with international credit cards. So if you do the dynamic charge, right, you're doing it in their own currency versus it having to do it at the POS level, which is saving you that 100 BIP transaction cost.
Right, exactly. And depends if it's Visa or MasterCard or whoever, but there's 100 BIP and then sometimes another 60 basis
Yeah.
points on top of the interchange rate. So if you can alleviate and get some of that revenue share back of, you can negotiate it with the processing companies. You can get upwards of 2% of the 3% back. So it definitely helps on those foreign transactions for sure.
So you brought up the use of the premium credit cards as a discussion the other day, talking about how people are wanting their loyalty points almost more from the premium credit cards as opposed to the brand programs. It's really cashing in using those premium credit cards and getting their points and loyalty benefits that way.
Yeah, no, exactly. And another thing that we've been seeing pop up a little bit more is like selling some advertising space on the POS systems. You can basically sell that out to, whether it's a charity or whomever it may be. I'm sure you guys have been to, some type of hotel or store or something like that, and you'll see like, do you want to add a donation or, whatever it might be. So you can basically sell out that space on the screen as well, to offset some of those charges.
So, labor, we had a slide on that earlier. We've had that discussion, always has been the greatest expense for hotels. Daryl, in the luxury segment, I think more so than any other segment, labor historically has been significant because it's not only a cost, but it's part of that product that's being delivered, that high level of service that historically luxury guests have paid the premium for and expect. What are some effective cost control measures that you've seen, above and beyond just less staff, ways to control labor costs without compromising guest satisfaction?
Yeah, I think the most successful thing that we've seen is really the cross-training of staff. It helps cover the need where you have it at the time. So, cross-outlet training programs, so they have a better understanding of what the menus are, what the execution looks like within the department. So that's been really big for us. And the other side of it really is the labor management software. Really getting ahead of that, understanding what the occupancies and the demand look like, not only from a hotel level, but also at the outlet level, and ensuring that we're staying within compliance and whatever our expectations are from a labor cost perspective.
And David, at your hotels, any best practices for recruiting, retaining employees?
I think we all know COVID did a number on the hospitality industry. And so I think for us, we have tried to really embrace the training and development side of what we're doing. We recognize that if we want those really quality line level or junior manager level candidates, we have to invest in them. We have to invest in them from a compensation standpoint, from a training and development standpoint. And so I think for us, that's where we're putting our energy, is into comprehensive training programs, career pathing, really trying to find what people are interested in, whether it's line level or salaried managers, and leaning into that and trying to find them, the growth model that works best for them.
Yep. And I think listening is key, right?
Yeah.
Like understanding what's actually important to some of these staff members, right? And that, like, retention may just mean giving somebody a consistent schedule, or it may mean giving them some flexibility in their schedule, right? Or, they like the gamesmanship and they want to be incented, or, in certain markets, giving people some food to bring home is important, right? You just have to understand what's important to your staff, and you figure out how to incent to it, and you ingratiate them to be part of the family, right? I think everyone who's been on ILHA seminar before has heard that I say that August 15th is the happiest day of the year, because we buy school supplies, right, that are branded, and we make the employees' children feel like they're part of our hotels and our restaurants, right? So then they're proud of it, and they're proud of where their parents work. And that really has been very helpful for us.
I think overall, there's been a bit of a shift to coming out of COVID, or even during it, that, the hotel industry and restaurant industry, we're pretty notorious for having people work a lot of hours, especially if they were salaried. And we found that we had to rebalance that and change our expectation as operators to say that there needs to be that life work balance that everybody was looking for. And that's carried over into the operations of the properties.
Yeah, we've had some properties embrace 4-day work weeks. I couldn't agree more with both those sentiments. The listening part is huge. David nailed it. Asking people what their goals are, not just telling them where they're going to go, I think is so important.
So I attended a seminar, and a professor had done some research about gig employees in the hospitality industry. Obviously he mentioned experiences with Uber and Lyft and the grocery delivery services. Have you seen that, or have any of you implemented sort of the hiring of gig employees in your hotels, and how has that worked? Or not?
I think David, there you go.
I was saying it's the dream, right? Like, we think about it on the hotel side of how to find the college kid who will work 4 to 7 every day, right? Or 3 to 7 every day, right? And create, or the swing shifts on certain of these things, right? We found we've tried it a lot in the restaurant space with cooks and line cooks, where you pick it up. There's a couple apps where you can actually, they can source people from a temp perspective. But it's tricky, right? I think we all wish, with the rising labor costs, right, and the fluctuations in times that people, need the service, we wish we could find more of that. It's just not so easy, because they need to be well trained, right? On the hotel side, front desk is the perfect example, right? You have a couple 2-hour bottlenecks in the day, and you wish you could solve those. But in order to have a gig economy individual, they need to be heavily trained on your systems. So it's much easier in the less service-driven positions.
Yeah, I would agree. I think it's a challenge. We've tried it in certain areas, banquets and catering, especially some of the support roles in banquets and catering. We've had more success than others, but I agree, especially in our luxury hotels. On the culinary side, on the service side, there's a lot of training that goes into that. There's a lot of development that goes into that. There's a skill set to those positions that, not that there aren't gig employees that you can't plug and play, but typically there's a lot more training that is needed for that to be successful.
So working with the hotel sales and marketing departments, historically, their primary role was to focus on selling rooms revenue. But as revenue management has evolved, now it's total revenue management and profitable revenue management. So Daryl, this is your area of expertise. How have you seen all departments, or specifically the food and beverage department, collaborate with the sales and marketing department, again, to generate that spend beyond the guest room that we saw in the charts and increase that guest spend per occupied room in all areas of the hotel?
No, total revenue strategy or management has been the talk, I think, for probably a good almost 2 decades, and I think some adopted it well, and others talked a lot about it, but I don't know that there was any execution at the end of the day on it, and we've certainly been forced into it. To your point, the biggest thing that really you have to start communicating across all the departments. We have to define what that need is and make sure that everyone understands why it's important to adopt it. And where we found the biggest success is really making sure that there's a trust and a spirit of partnership that exists with the stakeholders involved. It's hard for people to accept a stranger coming into their department and making recommendations. They don't think that you understand how it works, and they get a little defensive over it, quite frankly. So the more familiarity that exists there and the partnership that starts, that's really where you have to begin. And from there, that's where the creative ideas start to flow. And you can get involved with the commercial strategy team of your property. And that's when it comes into, do we need to be, offering packages that are going to capture that guest on property because they're already paying for it before they get there as a part of their package and what they're anticipating during their stay. And outside of that, I think that it's also important that everyone that's involved, because each person has their own expertise within their discipline, to understand what are the market trends and what's changing. What are they identifying that's happening right in front of their own eyes? And how does that change what our strategies are going to be in order to capture those revenues? And then, lastly, I think that one of the biggest things is that it becomes a part of the culture at that point. And if you can create the culture and it becomes a part of the day to day, everyone really works more together in tandem, and that will really aid in the benefit of the property, the department, in ensuring that they're capturing additional revenues, because there's this open line of communication of being creative and understanding the needs behind it.
So to wrap things up, being a hotel data nerd, my sort of final question for everyone revolves around the data that you deal with, and this was addressed a little bit earlier today. So what are the key metrics that you look at every day, every week, every month, when it comes to monitoring credit card costs or achieving profits in the food and beverage department, or just overall hotel revenue growth and profitability? What are those statistics that you look at every day, especially since you're operating in the luxury segment? David, we'll start with you. David Grossman. David.
Yeah, I mean, I think first and foremost, guest satisfaction. Our guests pay our bills, so I think looking at our guest scores is always, where we start. We talked about human capital, the importance of our team. So turnover rate is huge for us as well. And then on a daily basis, we're looking at TrevPAR for the whole hotel, as well as revenue in the F&B outlets and in banquets and catering, I think is big for us. Per occupied room still is kind of something that we look at. I think from a food and beverage lens, that's something newer for us, at least within our company. I come from independent restaurant background, so that was something that I had to kind of wrap my head around, but I see the value in it. But ultimately, I think, I look at our guests as the ones that are the most important thing to us. So we start there, and really that dictates kind of what we look at as we move forward.
Yes,
And I think the food and beverage is getting better and better at forecasting on the revenue side, and I think we're very focused just knowing how much of the P&L today is coming from labor, right? Are we scheduling to what like we forecasted to do something? Did we schedule to that forecast? How did we do versus that? And if revenue is not coming in or it's a slower night, did we make the appropriate cuts, right? And vice versa, right? Where are those variances? And I think so I think the labor part has been very important. I think the purchasing and making sure your POS and all your inventory management tools are clean, right? Which is a huge issue in this industry. right? So you can monitor the open foods, you can really see in real time how your different dishes are pricing, right? And particularly in the times like now where beef prices are skyrocketing or some other thing is moving, how do we in real time make changes? Right. And seeing in the end of the month or the end of the week, right, what our theoretical food cost or beverage cost is to what we actually ran. I think those are things we're constantly looking at how you maneuver the business and also using the data available to understand revenue per hour, right? And whether there's certain changes we need to make to our offering to fill that hole, right? And or change our hours of operations, right? Seasonally or even by day of the week. So definitely a lot more data is being looked at today than there was, 5-6 years ago.
Yeah, we're definitely tracking what does the seat occupancy look like in our outlets. We're trying to identify, it's not as easy as it used to be, but where is that guest coming from? Is it an in-house capture, or is that somebody that's coming in from outside of the property? That really helps us define and understand what is our staffing expectation going to look like if the trends vary based on day of week. And then, I think that one of the other things that we do try to look at as well is really what, for those that are captured from the hotel side is what is that segmentation, and how do we market maybe better to someone that has more propensity to spend in our outlets, and make sure that we really get ahead of that as well.
And Colin?
Yeah, no, obviously for us, we kind of just focus on the credit card processing payments aspect. I mean, I would take a peek at that on a monthly basis for sure to just kind of ensure that the overall effective rate is relatively accurate. I mean, they're infamous for kind of slowly jacking up the fees, to say the least. Your effective rate can fluctuate based on various factors, card types, and transaction sizes, and things like that. But it'll give you a good idea, and just try to keep them honest, basically.
Great. Well, to close, I'd just like to thank the International Luxury Hotel Association for producing this webinar. Thank you to our panelists. Thank you to the listeners that have joined us today. And most importantly, thank you to our sponsor, Merchant Cost Consulting. Thank you very much, everyone.
Thank you.
Thank you.
Awesome. Thank you.